Hey guys, welcome back to the channel. So, one of the things I want to talk about is retirement and taxes. More specifically, how saving for retirement can help you save on taxes, right? Because the retirement savings contribution credit, right, is a federal income tax credit designed to encourage low and modest income individuals to save for retirement. So, this tax credit, which is sometimes referred to as the saver's credit, works out to a portion of what you saved during the year, ranging from 10 to 50% of your contributions, up to certain limits. The percentage you can claim depends on your adjusted gross income, or your AGI, and your federal income tax filing status. Now, you can include contributions to just about any type of retirement plan when claiming the credit. 401k, traditional IRA, a Roth IRA, a simple IRA, or a 403b plan. Rollover contributions, right? Funds that are moved from one retirement plan to another. Sorry, but they don't qualify. Your AGI, by the way, is your gross income, right? Which is going to include your wages, dividends, capital gains, and business income, minus adjustments to income, including retirement account contributions, student loan interest, if you have alimony payments made, say under like divorce or separation agreement, stuff like that. So, one of the things to talk about is going to be qualifying for the credit, right? Because you need to meet a handful of criteria to qualify for it, right? So some of these things are going to be you need to meet the income limits, have contributed money to a retirement plan, not be a full time student, be 18 or older, not be claimed as any other taxpayer's dependent, right? And then, of course, there are limits to your income, right? So the saver's credit is limited by your AGI, and your AGI is based on your filing status. So we're going to use last year as an example. So for 2020, right, you become ineligible for the credit if you're single, married, and filing a separate return, or a qualifying widower, and your AGI is more than 32,500. For head of household filers, you become ineligible when your AGI is more than 48,750. And for those who are married and filing jointly, you cannot together make more than $65,000. For this year, for the 2020 tax year, singles and those who are married filing separately need an AGI of 33,000 or less. Head of household filers need an AGI of less than 49,500. And those who are married filed jointly, they need an AGI of less than $66,000. For the 2019 tax year, the eligibility limits were 32,000, 48,000, and 64,000, right? As a note to keep in mind, though, like the reason why these numbers change and they will keep to change is because the income limits are adjusted annually. That way, they keep pace with inflation, right? So, one of the other things we need to do is calculate your credit, right? The amount of your tax credit is a percentage of your retirement contributions. The maximum contribution limit the credit can be applied toward is $2,000 for taxpayers who file as single, head of household, qualifying widow or widower, or married filing separately. It's $4,000 for married taxpayers who file a joint return. The percentages break down kind of like this. You're eligible for a credit of 50,000 of your contributions up to 2,000 if you're singled, right, married, filing separately, or a qualifying widow or widower, and your AGI is 19,500 or less, right, in 2020, or 19,750 or less in 2021. This drops off to 20% of your contributions if your AGI is 19,501 to 21,250 in 2020, or $19,751 to $21,500 in 2021. It drops to 10% if your AGI is $21,251 to $32,500 for 2020, or $21,501 to $33,000 in 2021. Now, I know it's a lot of numbers, but try to stick with me here. Head of household filers can claim a saver's credit for 50% of their contributions up to $2,000 with AGIs of $29,000 or less in 2020, or $29,600 or less in 2021. The 20% credit is available to those with AGIs of $29,251 to $31,875 in 2020, or $29,626 to $32,250 in 2021. And then that's going to decrease to 10% for those with AGIs from $31,876 to $48,750 in 2020, or $32,251 to $49,500 in 2021. Right? The 50% credit on contributions up to $4,000 for married taxpayers who file a joint return is available for those with a combined AGI of $39,000 or less in 2020, or $39,500 or less in 2021. And then the 20% credit is available for those with a combined AGI of $39,001 to $42,500 in 2020, or $39,501 to $43,000 in 2021. And then lastly, the 10% credit is available for those with a combined AGI of $42,501 to $65,000 in 2020, or $43,001 to $66,000 in 2021. Now, let's do a little math, huh? So, let's say you qualify as head of household and you contribute $500 a month or $6,000 a year to a qualifying, whether it's your 401k plan, whatever your retirement plan is, right? Your AGI is $45,000 in 2020. So you're eligible for a credit of 10% of the $2,000 contribution limit. That works out to a credit of $200. You could claim a credit of $400 or 20% of the contribution limit. If your income were $30,000, you'd be entitled to a credit of 50% of the $2,000 limit, or $1,000 if your AGI were $29,000. That amount, the $1,000, is the maximum credit available in or was available in 2020, unless you're married and file a joint return. In that case, the maximum credit would be $2,000. Now, there's these things called ABLE accounts, right? We're going to talk about the provisions for ABLE accounts. ABLE accounts are achieving a better life experience, right? And these are tax advantage savings accounts that can be established on behalf of disabled individuals and their families, right? They were first introduced in 2014. Beneficiaries must have become disabled prior to age 26. These accounts become qualified for the Savers Credit beginning in 2018 under the terms of the Tax Cuts and Jobs Act. You must be the designated beneficiary of the account to claim the Savers Credit. The same income limits and other requirements apply based on filing status, and rollovers from other accounts don't qualify as contributions in this type of account either. As a note, as the account owner, a beneficiary may contribute to these accounts as well as family and friends, but only a beneficiary's own contributions are going to be eligible for the Savers Credit, right? And then when you go to claim the credit, right, to claim the Savers Credit on your federal income tax return, first you've got to complete the IRS form. It's 8880, right? 3 8s and then a 0. Transfer the amount that appears on line 12 to Schedule 3, line 4, and then transfer the total of all non-refundable credits you qualify for on line 7 of Schedule 3 to line 20 of your Form 1040. And, of course, you're going to attach that form, right, 8880, and Schedule 3 to your tax return. As a tip, if you're using a tax preparation software, it will prompt you to answer questions about your retirement savings and can complete these forms automatically for you, right? So you don't even have to worry about it. So I hope you guys, who don't make a lot of money but are looking for ways to save money in your taxes or get more money back on your taxes and stuff like that, as a way to save you some extra money or put a little extra money in your pocket. I hope this guy, kind of helped you guys a little bit. I know it was a lot of numbers. It's rough right there in the middle, right? But I appreciate you guys if you stayed to the end like this. If you did, go ahead and hit that like button for me. If you're not subscribed to the channel, I'd really appreciate it if you did. Until I see you guys in the next video, y'all be safe.